World Wide Web. This is James, your stock ticker picker fella. We're going to do a quick update on Wayfair Inc. The reason we're choosing this one is they are rated as the top Bed Bath & Beyond competitor. I'm thinking who is going to win the $5 billion of revenue that might be left behind when Bed Bath & Beyond vanishes. There's going to be a market out there. It's about $5 billion big. It used to be $20 billion big. Apparently, Wayfair has been pitching this the whole time. Their stock is worth $33.67. But if we're going to watch the inevitable closing of bbby, I want to see where this money is going to go, who's going to get it. Wayfair is up 11% in 6 months, 7% down in a month, 2% in 5 days up. And we'll look at the big charts. 1 year down from $100. Woo! This thing took a ride, and then it had a nice comeback. It came up to $66 a share right here. Goodness. So this thing here is all over the place. Today it's one of its low points, so it might be a time to start actually thinking about this one. You want to dump it at one of those nice high points. Columbus Day sale. Wayfair is doing a big deal. Their stock climbs as company signals improving trends. Stock extends rocket ride after long time bear flips to bullish in the wake of job cuts. So they cut some payroll. They cut back on some things. Their income statement quarterly looks like they lose just a little bit every quarter. $3 billion in revenue for the quarter isn't too shabby. Doesn't look like it's growing up yet. When they get that bbby business, I think it's going to explode a little bit higher, though. Their annual revenue looks like it tapered down to $12.22 billion from $13 billion. So their annual year over year has fallen, I guess, 3 times in a row after it just blew up. Kind of blew up right as, Bed Bath & Beyond didn't start collapsing until here. So they're not getting their money yet. $12.2 billion of revenue. Operating expense $4.73 billion from a company that does $12 billion in revenue. That's a pretty big operating expense. Half of this revenue, or a third of it, or a fourth of it, is cost of product. So you have that plus the operating expense. That starts to occupy a big portion of everything that you've done. So when you take in $1.95 is gone between cost of product and your operating cost, it's never going to leave much of an opportunity to put up in earnings. Yearly, they've only won. No, they didn't win there. They did win here. In 2020, they won $185 million. They just don't ever care about showing up a profit. And when they put up these losses, they're so tiny. It's almost like they're doing what I just said they were doing. They got half of this blue line is going to cost of product. The other half is going to operating costs. If they just laid off some people, that might have seriously changed things for them, because that's the kind of thing that they had to do in this situation. Yeah, just astounding. Let's take a look at their balance sheet real quick. Oh, wow. Let's see how much money they have, too. They've been upside down. This looks like Bed Bath & Beyond. $3.6 billion in assets and $6 billion in debt. Ow. Ow. Okay. Please compare this to Bed Bath & Beyond situation. You tell me what the difference is. Yikes. Revenue $12 billion annually, and your debt is $6 billion. Well, I guess it's not. It's only half their revenue. That's the good news. They should be able to make their monthly payments. It's making the operating cost huge. So cutting back the people isn't going to be the big dent that we would hope for. I mean, they might be able to shave $1 billion off of this and get rid of this loss and turn it into a win. I guess that's the whole point. But is this thing going to be a monster win? It's going to need growth for that. Or they're going to need to get rid of some of that debt. But that debt is just strangling them. And the only way to pay off the debt is with cash or new sales or a new offering or a dilution or an investor or something. They have $1.3 billion in cash. They could pay off 15% of their debt if they wanted to with their cash. They could pay off more than that. Yeah, about 15 to 20%. That wouldn't be smart, though, because then you wouldn't have any cash. But they need to make money for a little while, and I think that's going to probably fix them. I don't know why the stock says $33. Let me see how many shares are outstanding. I've got a feeling it's not very many, but they are a big business, so it might be a bunch. Hang on 1 second. Shares outstanding. Not going to tell me there. Oh, we got to go to the balance sheet, which is hidden. Shares outstanding. 110 million. So no, that's not that many shares. That's why it's well, and they're a huge company. So that's about right. Yeah, $33 they're giving to a company that doesn't make any money with declining growth. Yeah, I would never put this on my buy list. I would maybe encourage put options on it for a while. But if you think they're going to be the beneficiary of Bed Bath & Beyond's $5 billion, well, that would just throw them over the top. They're not going to get all of it, but they could get $1 billion of it. There could be a little bit of growth in their future. But they haven't shown any on their own. They seem to have tapered away. So we're going to look at another one of Bed Bath & Beyond's competitors in the next video, and we're going to try to find the best one, and we're going to find out who is in the best position to have a small increase in market revenue, market share. Yeah, damn, this thing can get big. $343 in 2021. Damn, you got to be pissed at $33. You've lost 90% of your money. Oh, this collapse. This was the guess what, we're not growing anymore collapse. It just freaked people out. That's how we got to today's price. We were at 330 on a somewhat profitable company, apparently. Or even was it? Was 2021 profitable? I don't seem to remember getting that out of reading these charts. Let's take another look. Oh, that was their only profitable year. That's right. 2020, they threw up a paltry $185 million. And that was $2 a share, I guess, almost. Done in 1 year. If they have 200 million shares, or if they have 100 million shares outstanding, that's almost $2 a share. But why would $2 a share take this thing into the $300 range? That's extreme. I guess they thought it was the hottest potato on earth. So $315 was extraordinarily overvalued. That's why it felt like a block. See, everything does have gravity. Sometimes gravity is resisted in the stock market, and then gravity just takes over. And all people had to see that it wasn't worth $2 a share. It was worth negative $1.50 a share. And then all of a sudden it was worth negative $10 a share. That's where they're at now. And does that look like it's getting any better? No. Now it looks like they're still losing $1.5 billion. Eeks. Yeah, they're still negative $10 a share range. Ouch. Well, this isn't the company for us. Maybe you've got a short thought for it. You like this big down line. They might be picking up a little traffic, though. They might be getting some free sales coming from somewhere temporarily. They are the #1 beneficiary. So says everyone that's smart online, declares me. Yeah. Anyways, thanks for watching the video. Please like it and subscribe to my channel. We're going to do another update on some more Bed Bath & Beyond competitors. Where's the $5 billion going? Who's going to get it? See you on the next video. Thank you for watching.